Hey traders, Siam here. So one of the things I find important in life in general is that you need the correct model. And if you have the correct mental model of something, no matter what topic you're talking about, then you can sort of see things clearly, and then you can also propagate or forecast what may happen, whether it be politics, geopolitics, or whatever. And it's the same with crypto and Bitcoin. And I've shared every single move publicly to my students, at least for the last 5 years. And so you've seen all my wins and losses. But if you have been following me for a while, you'll see that with Bitcoin, I've called more correct calls than losing calls, and thus have made more money than lost money, if that makes sense. Even during the bear market of 2018, I was still broadcasting and talking about Bitcoin, and therefore I like to believe I've got a more accurate model than most regarding Bitcoin, and I've called all sorts of things. So here, this is back in November 2018. This is me calling for more falling from 6,000 down to sort of 4,000. And if you look at the price, just so you can see what happened, Bitcoin, you have to this. It then precipitously dropped from sort of 6,000 down to 3, so I wasn't too far off in that estimation. And then basically here again in October 2018, I was basically looking for a move to the downside followed by a massive run to the upside over the next couple of years, and that's exactly what's happened. We had a move to the downside followed by a big move to the upside. And then 9 months ago, I said that we should see $50,000 Bitcoin pretty darn soon, and here we are, sat there. We've just been above it. So now, the reason of this video is it's really not a clickbaity video. We're going to talk about commodity pricing, the two accurate forecasting models I follow for Bitcoin, and why I expect at least $100,000 Bitcoin, $20,000 Ether, and $5 ADA. So let's do this. So first of all, let's talk about commodity pricing. So let's say we have some random metal, okay? It has no real use in the world. It has some use. Let's say it's like gold, okay? It has some uses, not that much industrial uses, etc. And let's say that there are 18.5 million ounces of this metal. So this is, call it global supply. And let's say they're mining this stuff and they're bringing out 100 ounces a month, okay, which is called the flow, and therefore we have, with everything else being equal, we have a price of X. Now, simple demand and supply, just like with oil. If, for example, the supply just shot off, as in declined massively, so instead of 100 ounces per month flow, we now have 10 ounces a month, what do you think the price is going to do? Yeah, the price is going to shoot to the moon. But vice versa, if all of a sudden we find the mother lode of deposits or whatever, and now we're doing 1,000 ounces a month of flow, well, the price is then going to drop. We all know this, demand and supply. So, well, supply and demand it's actually demand and supply, if you're being pedantic. Now, the cool thing here, and by the way, this is what's called stock, as in the supply to flow. It's the stock to flow model, or some people call it stock to flow model. And so this is an economics concept that has been around many years. So this is no different than Bitcoin. This is why the stock to flow model, when you're looking at it at Bitcoin, is pretty interesting. So in this case, there is roughly 18.5 million Bitcoin in total global supply right now. The flow is a bit different. We're making 900 Bitcoin per day, which may sound a lot, but over the next 120 odd years, we're only going to get another, so basically it's going from 18.5 million to 21 million in terms of total supply, but that's going to take roughly 120 years to get there. So when you look at the distribution curve for Bitcoin, it looks like this. So the blue line is total supply, and you can see that it's a rapid distribution, and then it tails off. And in terms of the rate that it's being mined, it's falling. Okay, and it's because it has these halving rates. So every 4 years, the amount of Bitcoin mined per block, so every 10 minutes, halves. So to the point where right now it's 6.25 Bitcoin per block, i.e. 900 Bitcoin a day. So we're basically, if you just to put a rough approximation of where we are in this block here, the 6.25 Bitcoin block. So I would say call it 90 to 95% of all Bitcoin that will ever exists right now, because the distribution or the flow gets pretty damn flat from now on. So when you have effectively, so going back to this example, we effectively have a pretty stable supply. Okay, it's not going to really increase that much over the next few years. 18.5 million, 19 million, as you can see, we're in this sort of phase. But look at the flow. The flow is decreasing, and so we have what's called a deflationary asset, or non-inflationary asset. So the price, in theory, should, with all things being equal, should go up. Now, this isn't anything like original. Stock to flow model has been around for ages, and what I'd highly recommend is if you just go to Google and just type Bitcoin stock to flow. And you'll find a whole bunch of different things. So I think the first person that really sort of looked at stock to flow when it comes to Bitcoin is a guy called Plan B. He's just an investor, etc. And I would also click this one, look into Bitcoin right now. Look into bitcoin.com. Okay, so these two are pretty interesting models. So where are we? Yeah, so this is the better looking chart. So what this chart shows us is the price of Bitcoin, which are these pretty colors, hugging the Bitcoin distribution curve, which is and these little things here are it incorporates the halvings basically. So mid 2024 is the next halving, and then we see a big old appreciation. So what you can see over here is that the price of Bitcoin hugs this chart. So this is basically the stock to flow line here, and it hugs it pretty darn well. And when you're looking at this sort of temperature scale over here, you'll see that we tend to have a peak. So the market goes overvalued in comparison to the stock to flow line when we get to sort of the yellowy sort of green areas. So when we're looking at the yellowy to green areas, we're looking at sort of, what is it? Call it, let's say green. So 800 days until the next halving. So so one thing that you could look at, I'm not saying this is guaranteed, I'm saying it's one thing that you could be aware of, is you could say, okay, well, what date is 800 days before the next halving? So you could then go, right, next Bitcoin halving, it's going to be sometime in 2024. Yeah, but when? It's probably going to be about May. Let's have a look. So it's March 2024. So then we can go into a date calculator. So let's just put, I don't know, March 2024, and we're going to subtract was 800 days roughly. So obviously all of this is massive ballpark, and that brings us to the 5th of January 2022. So about a year from now. So let's have a look at this. So green, sometimes, mind you, green, it could peak a bit. So we could use 900 days maybe. Let's see what 900 days does. Okay. So long story short, what this model is saying is that by so January next year, or towards the end of this year, 2021, we could see a little peak in Bitcoin looking at the stock to flow model, and it could most likely go beyond this line. But it's interesting to see that this stock to flow line caps out at $100,000 for this cycle. Okay, so we could see a little blast from beyond it. So obviously this is a logarithmic chart, so it could be 130, 150 maybe, but then we'll have sort of a consolidation period for the rest of this cycle, and then the next cycle starts really from 2024 onwards, and then we're looking at sort of 1 million Bitcoin for the next halve period. So I find this rather interesting. And there's all sorts of different charts around that. So that's something to have a little look with. The other thing I look at is so that's in terms of what we're talking about, the two models. So stock to flow is the one model I definitely look at. And then I also look at the logarithmic regression model. So if we then get onto TradingView, This is amazing, by the way. I put $1,600 into gas last month, and gas is actually the best performing crypto on my portfolio at the moment. So I got in down here, and it's mooned. If we look at dollar wise, I got in at sort of $1.70, and it's now $15. It's just freaking nuts. So we'll be going into Neo soon to convert that. But yeah, anyway. So what am I talking about? I am talking about Bitcoin. Oh yeah. So let's have a look at Bitcoin. BTC USD. And I tend to look at the Bitstamp one. Simply because, if I just get rid of this, I'll show you that in a sec. It just gives us the biggest data. So if we look at the weekly chart, it shows us all the way back from 2012. And yeah, so it's two. In fact, let's talk about the halvings first, and then I'll look at the regression. So as you can see, I've drawn lines where we've had a halving, okay? And the next halving, let's draw another line, so it'll be sort of March. Where is that? Call it March 2024. So it takes us to around here. But you'll see that the only real constant that we have with Bitcoin, in a world of people talking about it and slating it and buying it and whatnot, are the halvings. That is the real constant. And look at the pattern between each halving. So 28th of November 2012 we had the halving, and then it did this sort of thing, and then it did pretty much exactly the same thing, where it rallies up hard. It has most of its time is cooling off and consolidating. Then we have another halving, then it rallies and it cools and consolidates. And what we've seen so far is pretty much identical to what we normally see. So then we can sort of have a look at the sort of bars pattern. So if Bitcoin was going to do something similar to the first halving, it could look a bit like that. Or if we were to again copy the other halving, it could look a little bit like that. So, and what is this showing us over here? So one model saying is we're going to be around sort of 125. One says that we could sort of spike up. Now, I take these with a massive pinch of salt, by the way. Massive pinch of salt. All I'm trying to say is that the model looks very similar. You can see they both rally, they consolidate for ages, etc. So let's just take let's just take this one here. As in, I'm just looking for the picture. Okay, so this is likely to happen. So let's look at the percentages. So with the first percentage, so from here to here, we had roughly a 5,400% growth from halving to halving. What was the next one? The next one, I'm going to have to adjust this. From there, we then had sort of a 1,300. And because we're now getting into a more matured asset, we're not going to get crazy 5,000% growth anymore, or even 1,400% growth. I think the next growth is going to be a lot less. So we could be looking at something like a 500% growth, or let's just pop this around here. Now, I'm sure there could be a relationship between these two, but there's just not enough data to see any patterns. There's far too many variables. But let's just be conservative. I mean, if you're saying you know, a 600% growth, that still takes us to sort of 72,000, which I find, yeah. So I don't expect 5,000% growth. So that's what I think a lot of people are doing. They go, oh, look, here we're 5,000%, and then they put 5,000% up here, and it takes us to, like, you know, a ridiculous price. But the thing I actually look at more, I don't particularly look at the halving stuff too much. It's the regression. So if you click indicators and you type log, yeah, here we go, or log R, so for logarithmic regression, there's lots of different indicators, and some are actually coded incorrectly. The one I use is the 𝗀ₗ one, and what you'll find are two very simple looking bars. So halving, massive booming, goes to overvalued, comes back into fair territory, fair value territory, and here we are now. This is where we are. We have consolidated out of this. Remember, oh yeah, we need to look at the logarithmic chart, which we are. We've just gone past sort of the median, the mean, sorry, but we're not overvalued yet. So a lot of people say, oh, we're going to top out at $50,000. I think, nope, we're only just past mid-cycle. So where does, you know, overvalued put us in this regression? Remember, this regression curve takes into fact logarithmic growth and stock to, not necessarily stock to flow, but just the exponential characteristics of Bitcoin. And so overvalued puts us really, I mean, if we're going to do this by the end of the year, so let's say the end of the year is around sort of, or early next year, end of the year, puts us around here. So I guess the bands could be something like between there, and let's say, where's January? Yeah, somewhere around here. So this this price range, which is sort of between 80,000 all the way up to 240,000. Whether it will get up there, I mean, bear in mind it's never before. Well, actually, it has touched the upper band pretty much. So yeah, I guess somewhere around here. Now, when it gets into the overvalued part, I think it nearly always sort of really goes into it. It doesn't really just bounce off it. So it bounced off it here, but then re-attacked it. So I think what's happening right now could be similar to the first sort of pattern where we had a bit of a massive zoom, a bit of a consolidation, which is, I mean, mind you, it's very early in this consolidation that we're having at the moment, and then makes another stab at it, which, yeah, it's interesting. So personally, I think when you combine the stock to flow method and also this logarithmic regression curve, 100,000 is pretty much where I sit. So where is 100,000? It's 100,000, yeah, puts us around nicely in the middle of this red zone. So that is where I'm looking. I mean, yes, it could zoom past 100,000, but I think 100,000 is where I'm going to really start taking profits off the table. And also, there's something else. So it's not okay. So they're the two models I flow with. I look at, but I've got some supplementals which I also look at now and again, probably every 6 months or so. So if you go to blockchain.com, go to Explorer, because I've messed up this whole site and it's really tricky to find the charts, and then you go to View All Charts. You can get some actual CSV data, which is what I like playing around with. So you can download the price. So for example, let's just do all this. So all time. And by the way, I'm going to save you the trouble. I've already downloaded it. Save you the time. So you just export data, CSV. Now the thing when you do that is it saves it as a weird file. So you then have to type .csv to then save it as a CSV. And if you do that, you then have these things. So that we have the hash rate. So the difficulty of the network is, I guess, a byproduct of the hash rate. So I'm not going to look at difficulty, and then I'm going to open up the market price. So in here, let's open that up. I find this stuff interesting. You guys are probably bored to death right now. And then we have the market price. So I'm just going to copy the market price column over onto the hash rate. Let's just drop that down over here. I hate it when it tells me to the 10 to the power of blah. So I'm just going to edit this. Sorry, format cells. Let's just give it. I just want a number. no decimal places, 0, yeah, but that's because it's really low, it then goes up. Okay, here we go. So we've got a couple of charts here which you can look at. So we have the time and hash rate, so we can insert a chart there. Line chart, there goes, that's, and let's have this as a logarithmic chart. Sorry, click that, there we go. Hash rate, insert chart. Okay, let's do this now. Cool. So what you can see here is the hash rate. As you can see, it's following an exponential curve, and it's pretty similar when you compare the hash rate graph to the price. So you could actually just superimpose all of these. This is where my Excel skills stop. Yeah, I just don't know how to do that. I'm pretty sure someone else can. But when you superimpose those two, the price very much sticks to the hash rate in terms of the curve. And because I've always been a believer that the hash rate predicts the price. And so it's all following that curve. Now, obviously, when you're looking at a log chart, proper exponential growth is a diagonal line from bottom left to top right, okay? So at some points of Bitcoin's life, you know, it has followed exponential growth perfectly. But in reality, I mean, humans grow at an exponential rate to a certain extent when we're from a fetus, but then we stop. So in reality, nothing follows an exponential growth forever. It then peters off, and so you end up with this sort of curve that looks very similar to this distribution curve, something like this. This is what happens typically. So if we look at these charts, so let's look at the hash. Yeah, so here's the thing which I haven't seen anyone do this, maybe because it's complete rubbish. But one thing I look at is the ratio between the hash rate and the price. Okay, so all we need to do, this is confusing. Let's scroll down a bit. Yeah, let's go to the bottom. So if we make a little sum, and we're just basically taking the hash rate, so B1477, divide this by C1477. It should give us a big fat number. There we go. Let's just copy that. Come on, there we go. And now we can look at another graph, which is this ratio. So let's just move this down. And you'll see that when we look at this graph of hash rate compared to the price, or divided by the price, we get this lovely little ratio. And this is because, yes, it follows a hash rate, but it goes over, you know, just like with the stock to flow graph, it goes, you know, overvalued, undervalued, overvalued, undervalued, etc. And it's the same according with, if you were to superimpose the hash rate and the price will go up and down this line. And this is why you have a bit of a ratio. So obviously we don't know what the future ratio will be, but it could be anything from, you know, looking at this, sort of between 4,000 maybe to up to 20,000. So you could just say, right, you know, as this goes up, what's it likely to, you know, over time, what's it likely to be? So you could say, right, I don't know, it's going to be, call it 6,000. Okay, so let's just store that in the back of our minds for now. So 6,000. Now, so now what we need to do is, I'm just going to make this a bit bigger, is we're going to try and forecast a bit forward. So if I just look at this and extend so 10 to the power of enough. This is probably the most unscientific thing that you'll see, because all I'm going to do is I'm just going to get my little pen out. Let's make it green, and I'm just going to sort of I'm not going to draw a straight line because it won't. It'll just follow this curve and it'll flatten over time. So we could be looking at something like that, like this, or it could just flatten off like this. So I don't know, let's just take the mean. What is the midpoint of this? So whatever that is. So 9 zeros. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, and so we use that 6,000 figure. So divide this by 6,000. What does that give us? Whoops. Yeah, so that gives us a price of, you know, $166,000 Bitcoin. Or if you were to use, I know, 4,000, what was that? Divide that by 4,000, gives it slightly higher. But I mean, it could be, you know, half this. So what is 1, 2, 3, 4, 5, 6, 7, 8, 9 was, you know, let's be really pessimistic, and then divide that by 6,000. We're looking at a price of 33,000. So yeah, it's obviously we're way beyond that. So this is why I look at it. I don't really talk about it this much because it's not that reliable. Personally, I would stick to the stock to flow and that logarithmic regression band. Now, here is why. So hopefully you can see why I think Bitcoin's going to 100k at least. Now, 20k Ether. So this is interesting. So when we look at coin market cap, what you'll see is that at the moment, if we go to, they normally call it dominance or some rubbish like this. Here we go. So this is the Bitcoin market share. They call it dominance. Right now it's sat at about 61% in terms of Bitcoin. But it's the Ethereum to Bitcoin relationship that I actually care about with this particular thing. So Ethereum to Bitcoin has obviously fluctuated somewhat, but it's roughly 10. It's averaged around 10%. Okay, and right now we're looking. So look at the market caps. It's $186 billion compared to sort of 931. So it's actually a bit more than 10%. But let's be conservative or pessimistic. Let's say it's 10% of the Bitcoin market cap. So if all of a sudden we see Bitcoin at $100,000, well, a tenth of that is $10,000. So that's, you know, just simple, you know, rough finger in the air going, okay, well, Bitcoin is likely to do that, or Ether can easily do, you know, a tenth of that, which is $10,000 Ether. But if you look at the charts, if you look at the ETH Bitcoin relationship, obviously I strongly think that this is going to go back up over time. But right now, oh dear, we keep losing websites. What is the relationship in terms of market cap? The market cap is sort of 185, divide that by 930. Yeah, so Ether, in terms of market cap, is 19.89% of that. So if you look at, you know, going back to this over here, call it 20%, 100k Bitcoin, 20%, you know, 20k Ether. Now, I'm not going into all of the fundamentals. I actually think we could see higher than 20k Ether. I really do, simply because it's basically the AWS of the crypto world. Just like Amazon Web Services controls and runs all of the internet pretty much. I think Ether is going to be like that. So it has far more use value to the world and Metcalfe's law, so network value, than Bitcoin. And in terms of ADA, so ADA right now, or the last time I checked, is roughly 2% of market cap. So, well, so 32 billion, let's call it divided by 930. So, sorry, yeah. At the moment, ADA is roughly, so 30, what is the total market cap? Total market cap is 1.5, so 32. So I've just got my calculator over here. I'll show you what I'm doing. So it's roughly 32 billion. Divide that by 1,500, because that's pretty much where it is, 1517. It hovers around 2% of total global market cap. So what I'm basically saying is if Bitcoin can get to, so this is where we actually need to do a bit of maths. So remember that equation, more patience, Kryptonians. So we now have a price. So if Bitcoin is $100,000, so 100k, times circulating supply, call it 19 million. So what does that give us? This is going to be nuts. So 100,000 times 19, 1, 2, 3, 4, 5, 6. Gives us a Bitcoin market cap of that, and it's safe to say that Bitcoin will be, you know, roughly 50% of total market cap. So times that by 2, that gives us a $3.8 trillion market cap. Now, Cardano hovers around 2 to 3% of total market cap, but with what it's gearing up to do, and it has it doesn't have scalability issues like Ether does, and Ethereum 2.0 is going to, well, no one knows when it's going to come around. I think it's safe to say that, you know, Cardano could easily shoot up from 3% of total market cap to, let's call it 5%. Well, what is 5% times 0.05? That gives us a market cap of 190 billion. So let's just write that down. We're going to do a rough range. So 190 billion. And if it goes to say 10%, which it could, I mean, it really could, because ultimately I see Bitcoin losing, going below 50% in terms of market cap. Sorry, in terms of market share, just like it did before it got down to sort of 30-odd% during the alt boom. We haven't had the alt boom yet, which is why Bitcoin's still pretty high. So let's say Cardano gets to sort of 10% of the whole crypto market cap. So let's just divide that by 0.05, just get back to where we were, times 0.1 gives us 380 billion. Wow, I could have done that in my head. Just so again, using this, what is the circulating supply of Cardano? So Cardano, yeah, it's around 31 billion, and it's slowly, for this example, it's pretty much constant, so 31.1 billion. So all we then need to do, if you want to figure out a potential price, it's market cap divided by circulating supply. So best case scenario, 380, 1, 2, 3, 4, 5, 6, 7, 8, 9, 380 billion, divide that by 31.1 billion, 31.1 billion. There we go. So at best, it gives us sort of a range of sort of $12 to $6 Cardano, and I'm just rounding it down to $5. I think that's an easy, pretty fair shout. So this is a pretty long video. Hopefully, post editing, it's going to be shorter. But this is why I see $100K Bitcoin, $20,000 Ether, and $5 ADA. But I'm personally going to be scaling out profits and really taking my profits heavily when we hit sort of 100K Bitcoin. Hope that makes sense. Yeah, keep an eye on that logarithmic regression curve. It really does help. Cheers, folks. Bye.